Howdy, and welcome back to the channel. You got Digital Asset Hutch here, bringing you all the know about the digital asset and US economy space. And as you guys can see from the title today, we are taking it back to Bitcoin because they did have a macro reversal indicator flashing on the daily chart today. So if you guys enjoyed today's content, please drop a like below and subscribe to stay up to date with all the most recent content. But before we do go and dive into that, we will be going over what Jerome Powell said today because I think that is important before we look at the reversal indicator. But before we go and show you what Jerome Powell said, I want to tell you what the indicator is, and as you can see, it is a golden cross. And if you don't remember what the golden cross means, well, it's typically whenever the 50-day moving average crosses over a higher time frame, that typically indicates that a reversal is happening on the macro time frame, so it could see a bullish trend for the long term. So let's go ahead and dive into what Jerome Powell said before we take a look into Bitcoin's history, as well as we're going to pull up the CME perpetual futures contract because there is a gap that I think will be filled. So let's go ahead and see what Jerome Powell said in this 30-second clip, and then we'll dive into what he said and summarize his hour and 20 long conversation because I know y'all didn't want to listen to it, and I got that summary for y'all. So here you go.
What we said at the meeting was that we believe that we anticipate, is what we said, that ongoing rate increases will be appropriate. And the reason is we're trying to achieve a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. And we don't think we've achieved that yet. So we said that, and you know, now you see the labor market report, and I think, again, financial conditions are more well aligned with that than they were before. What we said.
So what exactly does all of that mean? Well, essentially, he doesn't believe that if they knew anything about this job report previously that it would have changed the decision, but they did hint that it could have possibly changed their conversation. So we'll go over exactly what he means by that in a bit, but they did say that they are strict on that 2% inflation and they don't care how long it takes, and they don't believe it's actually going to be smooth by any means. They actually think it could be a rocky ride. And why they might say that? Well, it is what they were hinting at with the job report. As you can tell, it is the lowest they've seen since 1969. And why is this important to know? Because if they see the labor market reports continue to increase and be bullish, or if they see inflation possibly reverse, they might hint that we might go to another 50 basis point hike. Now, the CME Group doesn't think this by any means. After this conversation he had today, they actually increased up to 92.2% that a 25 basis point hike will happen, as well as you can see here that we are on a steep decline for that inflation report. So just keep your eyes open for the job data that comes out before the FOMC meeting this next month. And we'll come back and revisit this CME tool. And if y'all haven't bookmarked this by now, I would bookmark it so y'all can get your update as well once that information comes out. So now that you kind of see what's happening on the macroeconomics, let's see what's happening with the macro side of Bitcoin with this macro indicator. So let's go back in Bitcoin's history all the way to 2015 and 2016, and you will actually see some interesting data. We actually had two golden crosses happen, but what followed them was not that bullishness that you would think from the description earlier. We actually had a nice 37% correction down, as well as we ran up crossing, and we actually did have a nice hike of, oh sorry, that's a trend line. We actually did have a nice increase of 50% once it did flash, but ultimately we did have a correction of, again, 40 to 41%. So high 30s, low 40 correction. But ultimately if you did wait about a month, we did run up from the low of that 312 all the way up to 14,000, well, 20,000. So let's go back, and this correction happens, and we fast forward and see another cross happen. And what happens with here? Well, we don't see 30 or high 30s or high 40s, but we ultimately do see a mini correction of about 10 to 12%. So just because we have this golden cross doesn't mean in the short term that we will be going up by any means, but ultimately long term, as you can see, we've had a nice increase every time after that correction, as this one pumped around 150%. So we won't go through these because we ultimately did have another crash, and this is pretty consistent to see a crash in the short term. So where do we go from here? Because I'm sure that's where everyone's wondering. Well, if we just take that data that we just got, a 37%, 40% correction would take us down to $14,000, $15,000 range. As well as if we did get a nice 10% to 12% correction, we're going down to that $20,500, $20,000 range. Now, you guys might have heard me talk about that CME perpetual futures contracts, and I think this is important to highlight because ultimately we have three gaps that we need to fill. Because Bitcoin in its history has always filled these CME gaps, and if you see, we have one below us and we have two above us. And if you do take us down about 12%, we ultimately fall into that CME gap, and 15 would actually fill it. So you could see this CME gap as being that last bottom before we see that ultimate reversal. Now, as you guys saw in one of my previous videos, during the consolidation phase, you do see a mini bull cycle, as people could call it. It's not actually a bull run, but it has a small little up of maybe doubling or tripling its price. So that is something to pay attention to for the future. So we could ultimately, as you see from I believe that was 13, we had that pump up of 50%, which would actually fill both of these tools, or both of those gaps, and then we would have that correction of 40% of high 30s, low 40s, and then that would ultimately fill the CME gap down here. So it could go both ways, and it is always important to look at both bullish and bearish indicators, because we could ultimately still pump another 50% upwards, fill both of those gaps, bumping our head, which I did mention in a previous video, before coming back down and filling this CME gap and crashing our head down in 17 range. I also highlighted that we could just ultimately have a lower correction of down here of about 15% before increasing all the way back up here, and then a slow bleed before the halving. So all of these are possible, and definitely comment below what you think would happen. But I just wanted to highlight this macro reversal indicator for y'all because we could be going up. Well, we do most likely know we will be going up throughout the years of Bitcoin if you're a 10-year hodler, but everyone's concerned about the short term for these entry points. So take a look at both of those that I highlighted for you today, and I hope y'all can stay safe out there. Bye bye.